Hello and welcome to Compass Global Markets weekly video update. I'm Tony Boyajian. Well, the US dollar continues its weakness. We've seen the euro and the sterling pound both stronger, and the Aussie dollar remains firm above 74 US cents. The big late-breaking news today has been, unfortunately, 2 suspected suicide bombs have exploded at a pop concert in the North London city of Manchester. Tragically, there are reports of multiple fatalities and injuries. We've seen the sterling pound come off a tad after that news report. Elsewhere, US economic data over the past few weeks has been disappointing. We've spoken about GDP, core CPI, inflation numbers, retail sales, housing activity, and recently construction data. All have been soft. The US dollar sell-off is a result of the alleged scandals that we've seen against the Trump administration, raising suspicion of this so-called obstruction of justice by President Trump, and concerns that pro-US economic growth policies such as his tax reform and increased fiscal spending plans could be derailed. The Federal Reserve is unlikely to raise interest rates in a slowing market, in a slowing economic growth environment. We've mentioned that before. We expect the US dollar to remain weak this week and to correct lower, waiting for Thursday's FOMC meeting for the May minutes to come out, especially on concerns or thoughts about reducing the size of the Fed's balance sheet. Nevertheless, a 14 June 0.25% US rate hike is now almost fully factored in. There's a 94% chance of a rate hike in June. However, we don't expect any further US dollar upside to eventuate because the Fed speak has been quite misaligned. For example, we heard Bullard, a Federal Reserve Governor, earlier this week talk about perhaps only one more rate hike in the US this year. So upside momentum for the US will be restricted. There is further impeachment talk about the US President Donald Trump. This continues to gather more momentum, so uncertainty about the US political outlook could also undermine the US dollar. We've seen the Aussie dollar strengthen by 1.2% over the past week in light of firm global growth in equity markets and also a rise in commodity prices, although I must say the downside remains vulnerable because of sluggish Aussie wages growth and low inflationary pressures. In fact, we've seen S&P Global Ratings come out today, this morning, and downgrade the credit scores of almost all of the Australian financial institutions except for the major banks, as it warns about the risks of property downturn in the Australian market. So we've seen the euro strengthen by 2.5% over the course of the past week. It's now trading at 6-month highs. Aussie euro has fallen 10% over the past 3 months. Elsewhere, the sterling pound was roughly firmer, about 1% against a weaker US dollar, but remains vulnerable to the downside because UK Brexit Secretary Davis recently said that the UK will cease negotiations with the EU unless demands for a €100 billion financial settlement have been dropped. So watch this space for that. And the big news is Thursday's US Federal Reserve Board meeting minutes for the month of May. Thanks for watching Compass Global Markets. I'm Tony Boyajian.